Good morning and welcome everyone to the Money Control live stream. You are watching markets with Santo and CJ. Well, I know it sucks that the extended weekend is over, but guys, life goes on and so does the market. It's a brand new day of a brand new week on Dalal Street, but it seems like the same old story, right, Santo?
Well, CJ, thanks. You just said it. They say that nothing new really happens under the sun, and markets is just an extension of that. Well, but the earnings season is underway, and you could see a fair bit of action in the days to come. I mean, it's a pretty much a familiar pattern. Companies report earnings, and markets tend to overreact before then they shift back to equilibrium. So we could see some bit of volatility there. But most importantly, I think irrespective of the numbers that these companies report, I think it's the overall market sentiment which then decides how much the stock will move. And right now, I think players are just waiting for an opportunity to take some money off the table. So that said, even if the numbers are really good, there's only so much the stock can gain. But if the numbers disappoint for some reason, then probably all hell could break loose.
Interesting thought that you believe that market is looking to take profits, but of course we'll get into today's action, and before that, let's just take a quick check on what we have on the show today for you. So of course it seems like Dalal Street is going to have Monday blues, and we are going to look into why Dalal Street is going to have Monday blues today. Next up, we are going to look at why Tata Power, Infosys and HDFC Bank are in focus. Plus, we look into whether the brokerage industry is going to have a stellar quarter of earnings once again. And lastly, in Andar ki Khabar, what's up with Navkar Corp? So yeah, that is what is on the plate today, Santo. That said, getting started with the market is not looking pretty. The picture is not pretty at all. It seems like the market after an extended weekend is coming back with a very, very dull and a sullen mood, back on Dalal Street. SGX Nifty 50 is indicating a sharp, almost 200 points fall in the market. Of course, taken that it is largely because we were not trading on Thursday and Friday when a lot of the other markets were trading around the world. So probably it's a bit of an exaggerated move there. Apart from that, the US markets ended lower on Thursday. Nasdaq, which is a tech-heavy index, fell almost 2%. Do remember, the US markets were shut on Friday on account of Good Friday. So that's that. Asian markets have also kicked off the week on a weak footing. The Chinese GDP data came out, and although it was okay-ish, around a little bit around above 4%, but still concerns remain, especially after the PBOC, the Chinese central bank, held off on cutting rates despite indicating otherwise. And lastly, crude oil is doing what crude oil is doing for the past 1.5-2 months. It's been boiling hot and is back above the 110 per barrel mark as we speak. So yeah, things are not looking that pretty, Santo.
Well, you just mentioned, Monday morning blues, and I think there's every reason, to be in that kind of a mood. Yes, the overall macro picture not looking very great at this point in time. Already you had, worries over inflation, and now if you look at the forex reserves, there's some kind of trouble brewing out there also. So the RBI's forex reserves have declined for now 5 straight weeks in a row. Wow. And it's fallen by about $28.5 billion during this last 5 weeks. That's not a good thing. Now, it's not clear the reason for this, but analysts say that the most likely reason is that RBI is now trying to sell dollars in a bid to strengthen the rupee.
Basically, you're saying that the rupee is trying to fall, but RBI is selling dollars to actually curtail that fall?
Exactly, because it's a very difficult choice for RBI if you look at it. Either ways it's in trouble. If it doesn't support the rupee, it means that you will pay a higher bill for for the crude that you import.
Absolutely, with crude oil prices also rising.
Exactly, but if you kind of try to strengthen the rupee by selling dollars, it means that your forex reserves will come down. So it's a very difficult task for RBI at this point. And
but also, Santo, why should an equity investor be worried about this? I mean, why is rupee important for equity investors out there?
So two things here. Of course, there's the macro picture, which means that if the rupee is weak, the import bills tend to go up, which in turn then kind of puts more pressure on the rupee.
Right.
The second thing is that FIIs, they tend to get a little nervous with a weak rupee. So whenever they see weakness in the currency, immediately they try to, take out money. They cut their exposure to Indian equities.
So FIs were already been selling, and I have been, dumping Indian equities. You are saying that there's scope for them to get even more nervous?
Well, if the rupee continues to remain under pressure, then probably we could see some bit of further selling from FIs on that count.
But amidst all of this, we have to give it to the market. The market has remained very resilient. And, as one of my former editors used to say, that market is always the first referendum on any event, be it war, be it elections, be it inflation, macroeconomic event, whatever it is. Market is the first referendum. And if you go by the resilience that the market is showing right now, I mean, maybe market is telling investors that you are trying to make too much out of something.
Or maybe it's being too complacent, CJ. That's the other way of looking
at it.
Yes,
it is possible that markets can be complacent sometimes. But remember, during the second wave, I mean, everybody was confounded why the market is not falling. Why is the market not falling despite the devastation that we were seeing across the country? But yet market were resilient. And that is largely because, see, if you look at even despite the macro concerns, equities tend to do well in 12 to 18 months after an inversion in the yield curve, which you earlier mentioned is a big concern, right? Secondly, Deutsche Bank's chief investment office has been, came out with a report last week, and it is expecting decent returns from Indian markets despite all the turmoil that we are talking about. And lastly, there are two main points that I would like to conclude this argument with: resilient earnings growth and resilient retail inflows. I think these two pillars of the market, if they remain intact, I think we can still bounce off a lot of the concerns that are coming our way.
I could have a longer argument with you on this point, but we'll keep
true.
It for another day.
Yeah.
Right now, let's
it's
look
time
at
to talk about stocks.
On our watch list right now. So starting with Infosys, the company had announced its fourth quarter earnings last week. The fourth quarter numbers were a bit of a disappointment, and even the guidance has evoked mixed reactions from analysts. So this stock could be under pressure today. The longer term outlook for tech stocks is positive, but what most analysts are saying is that in the short term the prices are kind of adequately reflecting all the positive developments, which means that there's little upside for the stock prices, and most analysts, broking houses which have been positive on Infosys, they have slightly trimmed their price targets for the stock.
But Santo, of course, it's possible. I mean, looking at the American depository receipts of Infosys on Thursday, it seems like we are in for a bad day for Infosys, the index heavyweight. But there are two things that I would really, want to bring across to our, viewers and also to you. Infosys management in the past, especially under Salil Parekh, has been known to be conservative when it comes to guidance. They are not the sort who would give big guidances and then probably have the risk of underperforming. They will always go low and rather outperform that than underperform. Even last year we saw them raising their guidance almost every quarter. So that is point one. Secondly, the margin guidance is still pretty good. I mean, even among record attrition levels across the IT sector, Infosys itself saw double-digit attrition even in Q4. The margin guidance has been retained overall. So that should be something that should give investors.
CJ, but as the market is saying, the prices already discount much of that. HDFC Bank is the second stock to watch out for. Again, disappointing set of numbers. Overall, the market was expecting good numbers across the banking sector, but the start doesn't seem to have been very good. HDFC Bank had reported good credit growth during the fourth quarter, and still that has not really translated into the numbers. And the general feeling is that because the bank is expanding very aggressively, there could be operating expenses could be on the higher
Apparently,
side.
it wants to bring branches as close to 1 to 2 kilometers of
so that means that more costs in the, going ahead, and that could put further pressure on margins.
Absolutely.
Also, many analysts are saying that the recovery in its net interest margins is also likely to be gradual. So very few analysts seem gung-ho on HDFC Bank at this point.
Yeah, HDFC Bank's NIMs, of course, have been an issue for the past 12 to 18 months. If you look at the chart of NIMs of HDFC for the past 2 years, it's been falling, trending down, whereas ICICI Bank and SBI and all have been trending up. So that has been, of course, one trade. But the one thing I'll say is, for investors, what could be heartening is that the credit growth has at least come back for HDFC Bank. Yes, it's largely led by retail housing loan, of course, and on the corporate side. But let's remember that HDFC is trying to pivot towards corporate loan as well. Just like ICICI Bank and SBI are being favored for the recovery in the investment cycle, so therefore a recovery in corporate loan. So probably once the merger is aside, once the big merger from HDFC with HDFC is aside, I think HDFC Bank could actually be a contra play on the market. That is a possibility.
It could be. Tata Steel is the third stock. The company has said that it will also consider a stock split when its board meets on May 3rd to consider the quarterly.
As if the stock was already not attractive enough for investors. Now the board is doing even more to make it attractive.
See, the thing is, when the company announces a stock split, theoretically it doesn't make any difference.
Absolutely.
You get instead of 10 shares of 100 rupees.
The difference is in the perception.
Exactly.
It's just how we retail investors are. We always
and that's always been a big drop. So that is what So always you could see a company announce a stock split and suddenly retail investors kind of making a big go for it.
Yep.
M&M is the fourth stock. The company said that it will be hiking. It's already, in fact, hiked prices of its vehicles from between 10,000 rupees to 63,000 rupees. Now that indicates some bit of pricing power to be able to do that in this market. The company is left with no choice really, because commodity prices, because of the rise in commodity prices, input costs for M&M has gone up sharply, and also M&M has been one of the better performing auto stocks this year so far. It's risen close to about 25% since the start of
I wonder even if even M&M is also eating into Maruti's market share on passenger.
Yeah, Gujarat Gas, the last stock, the company has said that it is hiking prices of both PNG and CNG. Now, that should help ease the pressure on margins to some extent, but at the same time, it could also hurt volumes.
Volumes, definitely. On my radar, first up is Tata Power. Mubadala and BlackRock are both combining together and investing about 4,000 odd crores in the company for about a 10.5% stake. The stake will come at a valuation of about $5 billion. So remember, Tata Power's own market capitalization is about 87,000 crores, and the renewable energy business's market value now is about 34,000 crores. So that
but
is
also remember, CJ, most analysts are pointing out to the fact that coal prices are rising, and that is likely to hurt Tata Power's earnings, and already valuations are just about
But the market is already looking beyond the traditional power plant business. That is the renewable business for according to analysts.
Prices didn't seem to show that, but you can
see. We can always argue about legacy and not, but yeah, that is the renewable business is what is in focus. Next up is, of course, Star Housing Finance. The earnings are going to come out later today. Stock has been a disaster since listing in December. It's down about 19%. So that is something to look out for if the earnings can actually finally give it an uplift. Mindtree is going to announce its Q4 earnings. Obviously, the cues from bigwigs, TCS and Infosys have not been good, but market is expecting about 5% sequential growth, in revenue. So that is something to look out for. Secondly, Windless Biotech. It's a micro-cap pharma company which has recently got regulatory clearances from two regulators. One is South Africa and the other one is European Union. There were concerns about the company's earnings growth, but with these regulatory clearances coming out for the units, that is going to probably ease some of those growth concerns, since the company can now start exporting to this market. Lastly, Ajanta Soa, another stock split. So yeah, I mean the stock has risen about 191% in the past 1 year. So the management has planning to come out with a stock split later this week, and of course that is going to make the company the stock more attractive for retail investors. And by the way, this is also a play on the edible oil market. I mean, we all know where Adani Wilmar has been going because investors are so bullish about the edible oil space, and this is another micro cap stock that could be in investors' radar this week. Entirety of this week.
And
so
thanks to the great retail rush into the market, brokerage firms have been doing good over the last many quarters now, and that is also a sector that is in focus in today's sectorology.
Absolutely.
So CJ, what do you have us for there?
So Santo, over 9 million Demat accounts were opened this quarter alone. 9 million this quarter alone, which is, I mean, it can get as good as it can get for brokerages. They have been riding this retail, new wave of retail investors who have been coming into the market. They have been riding this wave spectacularly. Their earnings have been great, and most analysts expect that momentum will continue in Q4 as well. Secondly, if you look at the turnovers, average daily turnover jumped about 12% on NSE. it had actually declined about, it had declined in Q1 and Q2 both. So yeah, I mean, it's looking pretty good for that. But we'll come back to the sector because we have the opening bell in just about 3 seconds waiting for us.
Well, with that, the market has opened, and as expected, severe pressure on the Nifty. It's opened about 280 points down at 17,203.
Yeah, Sensex about 1,000 points lower.
Yeah, Sensex is also down about 1,000 points at 57,549. Now, the weakness in Nifty was expected because Indian market was closed both on Thursday and Friday.
Absolutely.
So
it's a bit of an exaggerated move because, I mean, if we were trading on Thursday and Friday, we would have factored in a lot of the movements that have happened globally.
But we would still be pretty much here itself. There is no mistaking the fact that the market
absolutely.
is now in a
absolutely. What would have happened across 3 days has happened in just 1 day. So yeah, I mean, it looks an exaggerated move. But yeah, I mean, even the mid cap and small cap space. So it seems that there is selling across the board. We are seeing the Nifty mid cap down about 1.5%. Even the small cap index is about around 2% lower. So things are not looking pretty on Dalal Street, and it seems among the laggards, Santo, banks are the biggest laggards. I mean, Nifty Bank is down about 1.6%.
Your stock Tata Power has taken a beating, let me just tell you that. And Tata Steel is up by about 2%. Well, investors are celebrating the stock.
Absolutely, they are going to.
Infosys has taken a beating, stock down by over 5%. Tech Mahindra is down about 4%. So the entire tech pack, HDFC Bank again down by about 2%.
But I would not be surprised if Infosys actually probably comes off his day's low later in the day, given that a lot of the, value conscious investors and defensive investors, as you keep saying, could actually start accumulating the stock at these levels. Given in a volatile market, a stock like Infosys could be a good bet on the portfolio.
Well, coming back to sectorology,
yes,
CJ has been all bullish about the broking sector, but here are the few things also to consider. Broking is slightly, it's a bit of a seasonal business. There's huge number of client additions when the market is booming, but as the market starts coming off, obviously you're going to see some bit of slowdown there. So I guess many Robin Hoods would have learned their lesson over the last 4 or 5 months, and
I have my counter to your point of view, Santo, is one. See, as I was saying earlier before the opening bell, turnovers have actually surged this quarter, 12% higher after declining in both Q2 and Q3. Last week, a lot of the Wall Street banks came out with their earnings, and almost all of them, I mean, barring BofA, which will come out with their earnings later today, almost all of them had great revenues on the trading side of the business, almost closer to record highs. So volatility is actually a friend of the brokerage industry. It's not necessarily an enemy.
Yeah, but there's another way of looking at it, CJ, is that, they may keep adding a lot of client accounts, which happens when the market suddenly corrects and many people feel that there's a good opportunity here. But the number of active clients, I think that's the metrics to watch out for, because that usually also tends to reduce a bit whenever the market is very volatile, because a lot of them are kind of more of what you would call the steady investors, and the trading population is a smaller subset.
I take your point. Of course, active participation may decline, but sometimes if investors sniff a shift in the investing environment, as we have been seeing over the past 3-4 months, it is possible that a lot of these will come back to readjust their portfolio. So that is something to look out for.
So markets continue to be under pressure. Sensex still down about 1,000 points odd, and Nifty is now, I think, almost in danger of breaching.
I mean, the entire banking and NBFC space is like down and out.
Also the tech space.
Yep, absolutely. They are the banks and tech stocks, and banks are the one that are leading. And of course, no surprises with the Infosys disappointment on earnings on both Infosys and HDFC Bank. That is something that, I mean, was expected by investors.
So CJ, what do you have in Andar Ki Khabar?
On Andar Ki Khabar, I have a very interesting spot that I made on Wednesday. So Negen Capital, which is run by Neil Behel, and he has been making a lot of names for himself in the market. They have actually bought about 100,000 shares of a small cap company called Mitsu Chemplast, via bulk deal. And this is a company which is actually a play on the packaging industry. I mean, we know with e-commerce and all, packaging industry has seen a lot of improvement in earnings and volumes and all those things. And this is probably indicating that there is, I mean, if a guy like Neil Behel is going in on a packaging stock, that shows probably that there is more momentum left in the packaging industry. And despite whatever, we have been talking about downgrades to earnings growth and possibly a slowdown in the economic recovery post-pandemic, it seems that those concerns may not be specific to India at this point of time. Lastly, ICICI Prudential. I mean, this was an interesting one. The deal happened probably on April 12th. Now, ICICI Prudential MF has actually sold about 58,500 shares of Mahindra Life Space, I beg your pardon, which actually struck as a bit of an odd thing, given the bullishness and optimism that we have been seeing for the real estate space. I mean, for a mutual fund like ICICI to actually pair a stake in Mahindra Life Space, maybe could be a hint for maybe other investors also to take some profit.
Or maybe there would have been some kind of people wanting to redeem some of their.
That is possible, but why only go after real estate? Maybe.
Okay, that's another way of looking at it. So Navkar Corporation saw some heavy volumes last Wednesday. Big volumes there, and the talk is that there's a Japanese fund which has been trying to steadily cut its exposure to the company. It sold most of its stock, and the chatter is that probably it could be done with its selling over the next couple of trading sessions.
Interesting. So are you expecting a bounce back after that?
I can never say.
Can never say. Okay, that said, of course, it's time to wind up, and we will see you back again at 3 p.m. live when we take down the day's action. Please post your feedback on the comment section below and or reactions, and follow us on the the links that you can see at the bottom of your screen. And stay tuned to moneycontrol.com and the Money Control app for rest of the updates on market, economy, and everything else under the sun.
Have a nice day ahead.
Have a great day ahead. Thank you.